Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Tuesday pre-market webcast. All right, daily chart. Today's going to be a very interesting day. We talked yesterday about the weekly pivot, and we talked about the 9-day. Well, lo and behold, the Bears love 3 a.m. Eastern Time. They love to look good when the entire East Coast is tucked away asleep in their beds. They get very bold, and they like to make big moves. And then the lights come on, and they scatter like cockroaches in the kitchen. You can see here the blue line is your 9-day. Let's go to the hourly chart. So here's weekly pivot. They flirted with it yesterday. They had, as you can see there, those are hourly candles. So for the better part of 6 hours, they had a chance to make a really clean break of weekly pivot in the light of day. Couldn't get it done. Okay? They take it all the way back up to 65, 66. Then they take it down 3 a.m. and go and start to deal with the blue line here, which is your 9-day. Remember, we talked about both these lines yesterday. They need to convert them if they want to have any kind of a multi-day, bring it in kind of a thing. So, the sun's up. We have already made an hourly higher low at the 9-day. And everything is kind of concentrating itself at 40. So we're going to have to see, can they hold 52 all day? Can they take out both of these lines, or are we going to play ping pong? And I don't mind playing ping pong because it's a wide enough range to play ping pong. But where we close today relative to the weekly pivot and the 9-day is going to be critical. So like I said, it's a very interesting day. Are we just talking about another one-off from the Bears? I mean, you have a couple of sets of lower highs here since the 41.83 half. Here, and here. And lower lows to go with it. So what do you say, Bears? Can you take it down for more than 20 minutes? We'll see. So they're trying. If they can, then I think you look at a conversion to the 9-day. You start thinking about, where is the daily mid-band? That's about 40.55. So it's still a ways to go to the downside. But after having the upper Bollinger Band ride that we had, let's go back to the daily chart. So this ride of the yellow line here, which is your upper Bollinger Band, that's done now. If you convert the 9-day, then the middle band is what you expect to see next. Upper band, middle band, lower band. Come back here, upper band, middle band, lower band. Middle band, upper band, middle band, and then upper band. So how things are trading relative to the daily mid-band, for those of you that are new to the webcast, is the baseline assumption that I use to determine whether or not we are buy dips or sell rallies. Okay? A stock, a futures contract, an index that wants to trade between the middle band and the upper band is buy dip city. Okay? One that turns this green line in the middle band into resistance and wants to trade between the middle band and the lower Bollinger Band, yellow line, that's a sell rallies market. Haven't had one of those in a while. But when they exist, that almost always is a pretense. So the Bears want to take out the 9-day, get back to the mid-band, and at least have a discussion about what we want to be, into May. Otherwise, you're looking at a dip. It ends somewhere, and then what you'll see is the dominoes will start to fall. It'll lose the 9-day, lose the weekly, lose the hourly mid, start losing a succession of lower highs, and then lo and behold, we're back. So a very interesting day is going to unfold today, and a very important day for the Bears. They have a chance to do what they struggle with so much, which is downside price follow through. So we'll see what happens. All right. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. Come check out the room, and I'll talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook, and join us for a free trial at www.princetontrader.com. Trade them well.